At DLP Capital, we empower lives, build thriving communities, and drive success for our investors and team members. We believe in the power of real estate to transform the lives of our residents by providing them with high-quality, attainable housing that fosters a sense of belonging and community. But it doesn't stop there. Through our commitment to excellence, we also enrich the lives of our investors and team members. By increasing returns, driving profits, and fostering fulfillment, we create opportunities for growth and success. We're not just in the business of real estate, we're in the business of making a difference, and we can't do it alone. We need your help to continue to build thriving communities and transform lives. So join DLP Capital, and together, let's make a difference.
We want to find out, did anybody here today have a need that you presented in our speed round of needs and leads, that through the course of that exercise you found kind of somebody, a lead for that need that you had? Raise your hand if you did. Over here's one. Okay, anybody else? Another one back here.
Ooh, we've got
a few of these.
We've got 3.
Another one over here. He had 2.
Oh, he has 2. All right,
Okay.
Can you share what that was?
Yeah, we a data scientist to help us mine and understand what our performance data is telling us.
Fantastic. Okay, and you found a lead for that. In the room.
Fantastic.
2 leads.
Two leads for that.
There's another one
Wonderful.
right here.
Another opportunity here.
Yeah, met somebody.
Go ahead and share your name and location, maybe.
Sure. Brian Brzezinski, president of Shulman Properties, Las Vegas, and also Miami. So met somebody who has an interest in putting up LP equity for our deal in Miami. Ground up, multifamily.
Wow.
Wonderful.
That's a
wonderful.
great lead.
And your name and location?
Greg Lozenek, I'm with Grace Hill. Spent 30 years on the owner-operator side of the multifamily business, and I live in Connecticut now.
Fantastic.
Very
Was there
good.
another one?
Another one back here, white shirt on right there.
Go ahead and tear off a sheet of paper with your name and contact information so that we can draw it out of a hat. Where am I going?
Right here, right there to your right. Raise your hand again if you had them. Right here.
Whose hand?
This gentleman.
Oh,
Yep.
sorry.
Oh, this is great because I can't remember his name. It was the DLP guy that I was supposed to. Multiple people told me to talk to a DLP guy. He was ahead of me in the line, so I didn't get to meet him. Apparently, he was informing all the people I was meeting. So something with an S. Anyone throw me a bone?
Any
here,
DLP guys?
A couple
What was it
people I
about?
spoke
What was
to.
your need about?
It was about capital, sourcing capital for some deals.
Okay. That's all right. We'll figure out who it was, but you got that need met?
It's a lead, and I'm going to follow up on it. I'll figure it out.
Fantastic. Okay.
Tear off a sheet of paper with your name and contact information. Anybody else for the drawing? We'll do that at the very end. Yes, one more.
I'm Beth from Columbus, Ohio. I spoke with Kelly today, and she's going to connect us with some resources to help with delinquency collections and engaging residents in a more meaningful way.
Fantastic. Anyone else? Did I miss anyone? Danny, do you see anyone else?
I do not. I think we
All
got
right,
it. So
I'm going to collect 4 sheets of paper, and you can hit it with the presentation.
That sounds great. Okay, we're so glad you guys are here today. The rest of our agenda for the time that we're together is going to be really rich time of sharing with one another, learning together, kind of problem solving together, all around this idea of how do we build thriving communities? How do we not just approach the work that we do and the assets that we have and all of the stuff that we go to work for every single day? How do we do that with a little bit of a deeper context? A context in mind of building thriving communities rather than just doing this work for a different purpose. We're going to talk about how to enrich the lives of the residents that live in the properties that we have, how to drive investor profit. We're going to talk about how to do this the best of the best. And we asked you guys to be here today because we know you are the best of the best, and we put all our minds together, some powerful stuff's going to happen. So I hope you showed up today with a little bit of a sense of anticipation about what's going to happen today. You're going to get to hear from Don Wenner, the founder of DLP, CEO of DLP, here in just a little bit. He's going to share with you how we have worked hard to define what it means to build a thriving community. What is a thriving community? And I hope that you'll take lots of notes on that, really kind of soak that in. We want to get started with kind of showing you this video, and then Don will be right up to share with you right after this. So enjoy this video.
At DLP Capital, we empower lives, build thriving communities, and drive success for our investors and team members. We believe in the power of real estate to transform the lives of our residents by providing them with high-quality, attainable housing that fosters a sense of belonging and community. But it doesn't stop there. Through our commitment to excellence, we also enrich the lives of our investors and team members. By increasing returns, driving profits, and fostering fulfillment, we create opportunities for growth and success. We're not just in the business of real estate, we're in the business of making a difference, and we can't do it alone. We need your help to continue to build thriving communities and transform lives. So join DLP Capital, and together, let's make a difference.
All right, good afternoon, everybody. Can you hear me okay? All right. So who came here from NMHC? Who did not? Good number of you guys. So hope it was a great conference. I was actually in Phoenix at another event. Just got in here this afternoon. Excited to be here with you. For those of you who don't know who I am, I'll give you a quick overview. I'm going to tell you a quick bit about my background, a quick bit about DLP's background, and then we're going to talk about what is a thriving community. What does this mean? That's what this event is about, is a mastermind around building thriving communities. And then we're going to have some panelists come up here, some experts here on a couple different topics, a couple different elements of how we go about building a thriving community. But first off, I'll kick off. So my name's Wenner. I'm the founder and CEO of DLP Capital. Started the firm in Bethlehem, Pennsylvania 18 years ago. Other than those of you who work at DLP, who's been to Bethlehem, Pennsylvania? A couple of you, all right. An hour north of Philadelphia. We're now headquartered in St. Augustine, Florida. That's where I've lived with my family that you see on the picture there for the past 9 years. My wife, Carlos, some of you will meet later tonight, and our 3 boys, Donnie, Alex, and Jacob. So DLP today is a $5 billion investment management firm. We own about 25,000 units as a developer, as a builder, and as an operator. But the bigger side of our business is we provide capital, and a lot more than capital, which I'll touch on in a little bit, to other developers, builders, and operators who have the same focus around attainable workforce housing, around building thriving communities that we're focused on. If you don't know what that means, build a thriving community, that's okay. We're gonna talk about that in a little bit and have some discussion, because it's not a term that's really been used in the industry, and really how we think about it isn't really how the industry thinks about it. So this is the agenda for the rest of the day. I'm going to kick us off again with telling you a quick bit about my background, a quick bit about DLP's story and background, define what is a thriving community and why it's so important. And then at DLP, we have 4 different stakeholder groups as we think about it, 4 different groups that are our stakeholders. And I'm going to cover the first one, sponsors, developers, operators. And then we're going to bring up panelists to cover our residents, our investors, as well as our team members, those who work in our organizations. Some discussions around how do we make sure that what we do is a win-win-win for all of our stakeholders. So a little bit about myself. As I mentioned, I grew up in Bethlehem, Pennsylvania. I grew up to 2 parents who had me at 16 years old. So my mom ran a home daycare most of my childhood. I'm the oldest of 5. And there were always 5 or 6 other young children in my home every day from sunup to sundown. My dad was a correction officer. Parents divorced when I was very young. And I lived in 37 different homes by the time I moved out of my parents' home. So I really understand the feelings and the challenges of housing instability that, frankly, many of the residents who live in many of our apartment communities experience today. As many of you know, residents in apartment communities tend to move every little over a year, right? Moving every year or so, in some cases more frequent than that. I moved 37 times, went to 4 different schools in 3rd grade alone. 3rd grade being one of the most important years of a child's development. That's the big year of your 3rd grade literacy scores that tell us so much about the probability of future success, of social mobility. Again, oldest of 5. Grew up with great parents, though, despite some of the challenges I dealt with, I'll talk about in a moment. Started my entrepreneurial career selling donuts as a 1st grader, and carried that through into starting DLP at a pretty young age. At 17 years old, as a junior in high school, I decided I knew everything already. I didn't need to listen to my parents, and I moved out of my parents' home. As a 17-year-old, determined I was going to make it on my own. I was never going to come back and ask for money. And continued with moving quite a bit, and fortunately then ended up here in real estate, launching DLP at 20 years old, which I'll talk about in a moment. But today I'm 39 years old, soon to be 40 this year, live in St. Augustine, Florida, as I said, and I'm incredibly blessed in every which way of the word, and I know that. I have a deep, growing relationship with the Lord. I have a wonderful wife, 3 incredible kids. We're healthy. We've created generational wealth. I get to pursue my calling, have an incredible team of people that I get to work with each and every day, and do some incredible places. And I live in the best place on earth, St. Augustine, Florida. San Diego's close, but I love St. Augustine, Florida. And I get to travel and explore the world. We virtually school our kids and get to explore the country and the world throughout the year, which is a lot of fun. But I know I didn't achieve what I've achieved because I'm so great, but because He's so great. The Lord's given me so many blessings. I live my life by the verse of to whom much has been given, much will be required, Luke 12:48. And every one of us in this room, we're sitting here in San Diego, California, looking over the water on a Wednesday afternoon here, right? We all live in the greatest country on earth, the information age. I was blessed to be raised by parents who raised me in faith and loved me and cared for me. We are the 1% most wealthiest people in the world. Every one of us in this room is, right, living in the best country on earth that I believe, despite all the negativity we hear, the greatest time to be alive. And those blessings, again, the opportunity to have, right, creates responsibility. And that's where the focus around building thriving communities comes from. So I'll quickly tell you a little bit about DLP. So I started DLP when I was 20 years old in 2006. We started in residential real estate, selling homes and flipping homes. Then we couldn't find enough good contractors, so we started construction. And at the bottom of the market, we started property management. Then we needed more money, so we started private investment funds. And we started bringing in high net worth investors into our funds. And then quickly that accelerated our growth. By 2014, we owned about 700 properties. We've been growing fast. And we decided to pivot our strategy. We knew we were focused on attainable workforce housing, but it didn't feel like owning single-family homes, renovating them, scattered site homes, we could really scale it. We had grown up into that point, our revenue by 50% or more every year, and we knew we had significant goals ahead. So we said, how do we really scale this business? And we landed on two strategies. One was start buying large value-add multifamily, and two was to start lending money to other developers, builders, operators, initially mainly residential home flippers and landlords. And that accelerated our growth faster by being able to deploy our capital with other great operators, buying larger properties. Then we grew into ground-up development. And I sit here today, we're $5 billion in assets, but if you can read some of those screens there, it took us to the year of COVID, 2020, it was August of 2020, that we hit $1 billion in assets under management. I think it was 2017, we were at $100 million. I went to $1 billion, then next year $2 billion, the next year $3 and $4 billion, and then in 2023, $5 billion. We also bought a bank a little over a year ago as well. So we've had some just incredible growth, all centered around attainable workforce housing. We believe that we've been called to make an impact, around building thriving communities. What DLP does in one simple sentence is we finance the building of thriving communities. Our purpose at DLP, which stands for Dream, Live, Prosper, is to passionately make an extraordinary impact through the building of thriving communities. And again, I will define that in a moment. And our mission statement is to change the nation through the building of thriving communities. And our big, hairy, audacious goal is to positively impact 10 million lives and become one of the Forbes 100 largest private companies in America. And to give you an example of what that means, I got to spend a good amount of time with David Green, the owner of Hobby Lobby recently. They're number 71 on the list, Hobby Lobby is. They have 1,000 stores, 45,000 employees, and $8 billion of revenue, and they're number 71. So that's a pretty big goal. We're about 10% of that size today. We've built a flywheel. If you who's heard of that term from Jim Collins before, a flywheel? Awesome, yeah. So I'll show you that in a minute. Our foundation of our flywheel, though, is we know we're pursuing a calling from God. We know we've built our business around what's the best asset class in the world? Attainable workforce housing, multifamily, right? It's an asset class, an incredible need and demand. It's a tremendous crisis from a societal standpoint, but from an investment standpoint, it's an incredibly solid asset class. And then we built a really unique, in our view, investment structure that allows people to invest alongside us into what we do. This is our flywheel. It defines how we go about scaling our business. So this is year 18 now, and we've grown our revenue by 50% or more for 18 years in a row. We've 10x'd the organization any 5 years you pick, and we've 10x'd the organization any 5 years you pick, and had just tremendous consistent growth following this business model of starting with consistent returns to our investors with this focus around our ecosystem that you'll hear more about in a moment. We're a vertically integrated organization, like I know many of you are, across the spectrum of everything from development, construction, property management, lending, loan servicing, fund management, etc. These are our core values at DLP. We do a lot of work with sponsors and operators, helping them define their direction, strategy, and values. I don't recommend having 10, that's a lot, but we do have 10 core values that hopefully you get to meet a bunch of our team members here at DLP, who I will ask to stand up in a moment. You'll see these values exuding from them. This is where we operate top left is our headquarters in St. Augustine, Florida, where the majority of the corporate team lives. Company started again in Pennsylvania. Allentown, Pennsylvania is our office at top right. And then we have a small office in Orlando, and Asheville, North Carolina is a place I live part of the year as well. So this is our leadership team. Many of them, I think I counted quickly, 7 or 8 are in the room today. But many of our DLP team members here. So can I have my DLP team members stand up, and let's give them a quick round of applause. All DLP team members stand up. Many of them here. So make sure you get a chance to chat with them throughout the day. All right, so enough about DLP. Let's talk about what is a thriving community. Before I do that, and if those of you who came to NMHC already, I'm sure there was lots of this talk already, so I'm going to keep it pretty brief. But I just want to make a couple quick points. So problem that we have in every market, right? And I get to go to events like this and speak in markets all over the country. I've invested all over the country, and there's not every time I meet an investor who doesn't say, oh, my market has a major problem with a lack of affordable housing, right? Everybody thinks that it's their market's the only place that has a problem. Every market has a tremendous problem with the lack of attainable or affordable housing. Every market virtually in America has this problem. Certainly every market in the South does. Rents from 2005 to 2023, the average rent in America went from $604 to $1,317. Can you imagine that it was only 2005 that the average rent in America was $604? That seems, that doesn't seem like that was that long ago. 2.2 times increase in the average rent in America in the past 18 years. 18% increase in the past 3 years. And that includes 2023, where rents were pretty much flat. For arguably the first time in history, and there's different data about this, but arguably for the first time in American history, now more than 50% of renters spend over 30% of their income on rent. So for those in this industry probably know this, but 30% is thought to be the threshold of affordability. So meaning if your rent is more than 30% of your gross income, you're what we call cost burdened, meaning you're generally having to sacrifice something, healthcare, education, food, to afford your housing. So 30% is thought to be the threshold of affordability. Now, for the first time, over half of Americans are over that threshold. We were at 25 or 26% just 10 years ago. So a significant increase in the percentage of Americans struggling with housing affordability. And this is happening right now when we're in a rare point in time where many markets actually have a good amount of supply in the market, right? As that supply gets absorbed, which it will in most markets, this problem is going to get worse. One of the reasons the problem is so significant is the other side is even worse, i.e. home ownership. So the average home in America today is $406,000. Home prices went up about 2% nationally last year. The cost of home ownership right now in America is almost twice the cost of rentership. About $1,300 more per month to own a home than to rent a home right now. Obviously, that's a combination both of significant increase in home prices as well as the significant increase in interest rates. So all those factors and facts of why this is a major crisis also means why it's such a great investment opportunity. Occupancies are near all-time highs across the country. Yes, some great markets are having a lot of product deliveries and are having some short-term challenges. But overall, we've got a really strong demand for housing that's affordable or attainable. And we all hear these stats. We all know this in the industry. We all probably believe this, that we're a nation of renters. More and more people are choosing to rent for a number of reasons, but more and more people are forced to rent longer, go back to renting for all the reasons I just talked about. So our focus on DLP is to invest in this crisis, to invest in providing housing that is and will remain affordable. But we think about affordable housing as the starting point. We consider ourselves impact investors, and I'll define what that means for those who aren't that familiar in a moment. Our focus is to keep our housing attainable for working families, i.e. our rents are less than 30% of incomes. And we have a different approach to that. Example, we want to average 80% renewals. And we want 2-year leases, not 1-year leases. We want our residents in our properties for 8, 9, 10, 11, 12 years. We want our team members who work at the property to work at the property for 8, 9, 10, 11, 12 years. Those are different approaches. I bet you the average duration of somebody living in multifamily today is 15, 16 months. Data's kind of all over the place. I bet you the average employment is even less, right? Especially on the service or maintenance side, right? I believe in the saying, it takes a village to raise a child. And if you remember, I said earlier, I moved 37 times and went to a lot of different third grades, and the stats are staggering. Those who don't have stability in their housing, the effects that has. And one really important stat that I like to look to is third grade literacy. And there's many counties in America today that size their prisons based on the third grade literacy scores, because they know that in 10 or 15 years, the prison population is going to be heavily dictated by what is the level of literacy, i.e. how many children are reading to grade in third grade. Because if you can't read at third grade reading level, you start falling behind. So you're 6 times as likely to drop out of high school when you fall below the literacy level of third grade. You are 63 times more likely to end up in prison than a college student does if you fall behind at third grade literacy. But imagine if you're a young child in first grade, second grade, third grade, and you're moving every single year or multiple times a year. You're changing that village, your neighbors, your support system, your teachers. The likelihood of that happening goes up tremendously. So first let me define impact investing, then I'll define thriving communities. Who's pretty familiar with impact investing? A few? So similar to ESG is something more commonly talked about, but quite a bit different. So impact investing is making investments with the intention to generate positive social or environmental impact alongside a financial return. So we want to both generate a financial return and make a positive impact. Some of the impact funds out there think that you have to sacrifice one for the other. So, all right, because we're going to go and do some good things, you're going to accept lower returns. That's not our approach. Our approach is to actually increase profits and returns to our investors while making a positive impact. That is much, much harder, but incredibly more rewarding. And it can be done. And we don't have all the answers. We've got some things we're doing and we're testing and that are working for us, and that's what we have these panels about later today, talk about some different ideas, and we're looking for partners to have the same mindset we do and work with us on figuring out how do you best do this. It's not the way the industry is running today. And we target having our returns, again, equal or greater than market returns while making positive impact. If you're looking at this strictly, which hopefully you're not, but if you're thinking about this strictly from how could this make me more money, how could this help me raise more money, being an impact investment fund manager or investment manager has a lot of benefits. All these different groups now are looking for impact investment opportunities. The number of managers out there, the number of sponsors out there who are intentional about being impact investors is much, much, much lower than the overall market. It's a very small percentage of managers in our world today who are really out there positioning themselves as impact investors. So what are the elements of impact investing? Intentionality. You're intentional about making a positive impact about something. You have investment return expectations. So this is not philanthropy. Philanthropy is a really important element for this problem as well, and a part for us. We look at it that works alongside our for-profit business. And then, a range of returns, and it can be across lots of different asset classes and clear measurements. You have to be able to measure the impact you're making and be able to show how you're making an impact to investors. The market size right now for firms looking to make impact investments is $1.164 trillion, and that will skyrocket 10x in the next few years without a doubt. Here's some of the metrics we're focused on at DLP, some of the impact metrics we're tracking today or on verge of tracking, implementing today, things we really target. So some of the obvious ones, keeping our rent less than 30% of income, as we've talked about. That's sort of our baseline. Average occupancies, number of lives we've impacted, number of people joining church services, joining discipleship, number of people, resident satisfaction score, do they feel we're improving and enriching their lives directly from our residents, number of jobs we create, number of people we provide housing to, number of people we're serving, et cetera. All right, so let's talk about what is a thriving community. So a thriving community is a place where people are living fully, pursuing their goals, have opportunities for success and fulfillment, and have deep connections and relationships, right? People need connections to be part of a community. That's what almost everybody in America is looking for today is connection. And it's arguably the biggest crisis we have today in America So what we think about and how we've defined elements of a thriving community. So again, for us, we think about it's anchored in, its foundation is attainable workforce housing. If you can't afford your housing, it's hard to worry about anything else, right? If you don't have stable, affordable, safe housing, it's hard to start working on some of the other elements I'm going to talk about. So that's the starting point. That's not the end point, though. You need access to be part of a thriving community, access to banking, lending, investments. One of the reasons we bought a bank a year and a half ago now. You need access to jobs, right? You need jobs. People can earn a good living to be a thriving community. You need deep connections and relationships with neighbors, right? Actually knowing your neighbors, community engagement. You need education, family, God, church, ministry, discipleship. And finally, healthcare, nutrition, wellness. And so we think of these 8 elements that we want to do the best job we can to make sure that the physical communities we're building, we're developing, we're investing in represent all of these elements. And it doesn't mean we have to do it all ourselves. We can bring along partners to be involved in this. Then we think about this not just our physical rental communities, but the broader communities we invest in and that we're a part of. And we'll talk about that probably through some of these panels here this afternoon. All right, so that's what a thriving community is. Again, we don't have all the answers, but we're looking forward to the panel discussions later this afternoon on how do we enrich the lives of our residents, right? For almost all of us in this room, many of us who are operators, that's the biggest group of people we impact and we affect are our residents and our properties, while generating positive returns to our investors, right? And that's where a lot of people struggle is they think, well, if I'm going to start doing good things for my residents, my investors aren't going to be happy because that's going to take away from their profits, and I can't do that then. That's the general thinking that people have. That's the age-old way of thinking about it. That's the easy way to think about it. That's the escape valve. It can be done. And then how do we at the same time enrich the lives of our team members, those working on site and working in our organizations? So last thing I'm going to talk about is our first stakeholder, sponsors, developers, builders, operators, and then we're going to bring up our panelists. I'm going to take some questions then, take a couple minute break, and then we're going to bring up our panelists here for some deeper discussions. So here at DLP, again, we have 4 stakeholders. The first is our real estate sponsors. So we work with home builders, active developers, and build for rent, multifamily, manufactured housing, RV. Those are all forms of communities, the way we look at it. And we built this elite membership a number of years back, which was really a way of us trying to put together all the value we felt we could deliver to sponsors and helping them scale a business. And some of you will see back over in this corner, there's a bunch of different DLP stuff back there, including the book I wrote now about 4 or 5 years ago called Building an Elite Organization, which directly ties into this membership. We felt years ago when we started doing this, and due to time, I'm not going to give you the whole kind of overview of how this came to be, but in short, something we felt called to do, called to serve. I've spent 18 years now building one, as we call it, elite organization. The title of my book, Building an Elite Organization. One elite organization, one organization that's growing really fast, making a big impact, doing great things. But our thoughts saying, how could we go and take what we've learned, the resources, the expertise, the tools, the principles, and help other organizations build elite organizations where they're helping build thriving communities, helping enrich the lives of their team members, things we're going to talk about later this afternoon. And this is what we felt was the best way we could do that, best way we could scale was through this elite membership. And we built this centered around developers, builders, operators who check these boxes. You know, people who are aligned with our values, operators, developers who have a profitable business model that works. So we're not in the startup business, we're not in the business of helping people figure out in terms of this membership. We do lots of education, but in terms of membership, we're not trying to help people figure out. Somebody who heard Build for Rent's a really cool asset class and decided they want to try it. We're working with people who've got a business model that already works, but now really want to scale and have the desire and the willingness to do the hard work to scale. And a lot of our team here who jumps on calls with me with sponsors who we're talking to and getting to know have seen this happen many times, that sponsors come to us looking for capital, and that's certainly how we make money, and I'll talk about in a moment. But when I start talking with them, they say, yeah, I want to really build a great business, and I want to do this, and then I start getting into the meat of, oh, really awesome, that's so great. Talk to me, what are the problems in your business today? Talk to me, tell me about your team, tell me about how you're building leadership, tell me about your culture. And most, it's relatively nothing on the other end. Because the real hard work, I always define it as every person in this room has the will to win, want to be successful, want to win. Very few have the will to prepare to win. do the hard work, right? There's a terrible saying that I always come back to that says, business would be so easy if it wasn't for the people, right? That's the hard work, right? Building teams, building leadership, building culture, building communication, figuring out how you're going to solve issues together. That's the really hard stuff. Raising capital and finding deals is not. That's the baseline. That's just, you have to be okay at what you do to start being able to get capital together and find deals. The hard stuff is being able to execute. And that's what we look for, those who really want to do that hard work, that with maybe some help and some systems and some roadmaps, we can help them 10x their business. We're not looking for organizations who want to figure out how they can work 3 days a week and golf 4 days a week. There's nothing wrong with that. There's a lot of people running great lifestyle businesses. We're looking for people who really want to grow and make a great impact. We look for people who have an investment strategy aligned with us, i.e. investing in attainable workforce housing. And then finally, we want to do business with people we expect to do business with forever. And the first ever person who I started partnering with just walked in the room back there, and you'll hear him on a panel in a little bit, and we've done over $2 billion of deals together since, right? We want to work with people we want to do business with forever. And I always joke about this, but everybody's nice to me. Everybody's nice to me. Every sponsor I've ever talked to is nice to me in that they want us to provide them with capital, right? But are they going to be nice to our asset managers, our servicing team, our draw coordinators? Are they going to remain nice, right? It's going to be somebody that when my phone starts buzzing and I look, I'm going to say, or I'm going to be excited to talk to, right? And so we want to do business with people we want to do business with forever, people we're going to enjoy, people who pass the chug test or the 2 beers and a dog test. Somebody you have a couple of beers with and let watch your dog, right? And so somebody can have great values and be morally sound, but still not be somebody you really want to spend time with, right? We're looking for both. So that's what we look to work with. And then those people we work with, we try to bring them into our community and doing things like this here today. We look to provide them with coaching, consulting, content, the elite execution system, any way that we can provide value across our entire organization, and then certainly capital. These are how we think about the value we can bring to sponsors. So in terms of capital, what we do, and this is the only way we actually make money, is to deploy capital with sponsors. So we provide debt, which I'll show. We provide equity. We do a lot of interesting things as we build deep relationships with great developers, builders, and operators. This year, we'll deploy over $1.8 billion in capital, primarily with sponsors, a small number of sponsors, 25 sponsors that we deploy our capital with. We're a private company. All of our capital is in discretionary evergreen funds. We make all of our decisions in-house. And then everything we lend on, everything we provide capital to, we directly do as a developer, builder, and operator. And so when you're working with us as a finance something for you, you're working with our counterparties doing the same job you guys are doing. So the capital we provide, we do land acquisition, we do acquisition and development lending, we do vertical construction lending, we do bridge and value add lending, we do preferred equity, we do pragmatic joint venture equity, we do land banking, we do really everything across the board, especially as we build really deep relationships. And again, very selective though in who we partner with, because we're all limited by one thing more than anything else, time. So kind of the value proposition for somebody who joins as a member, we spend a lot of time, I spend a lot of time. For those who want to, we try to provide everything we can on a bespoke basis. So you say, hey, I'm at an inflection point in my business, or I'm trying to figure out clear strategy or direction forward, or how I'm going to take the next step in my business, how I'm going to navigate in this new environment. We'll do a full day, we call Compass Day with you, and spend a full day strategy. I spend half a day with you. Jackie, who was up here earlier, spends a half a day with you, figuring out with you and your leadership team doing offsites. It's one of my favorite things to do. We provide lots of virtual content. We do live events like these, including some really big events, which I think we'll highlight a little bit later. Provide access to our technology we run DLP on, called ES Tools. A lot around coming alongside, not only helping you build an elite organization, but helping you build an extraordinary family and legacy at the same time. So summary of our value proposition to sponsors. Number one is we're going to be your partner in building thriving communities, making an impact. We provide people surety of execution, speed, flexibility, higher leverage in this environment than virtually all other lenders, ability to scale and grow with you, deep expertise in what we do and investing in developing and building, managing attainable workforce housing, deep community investments not only in your business but in you and your family, and as I said, truly relationship focused. 93% of the capital we deployed last year in 2023 was clients who were our clients when the year started. And if Jake and some of our new team members did a better job, it would have been about 80%, just teasing guys. So we do want to add some great new developers and builders and operators, hence why we're here and why we're looking for new partners that we can do some awesome things together with. All right, so that's everything I have here. Checking time here. So we got a little bit of time. I'm going to take maybe 10 minutes questions if we have them. Then we'll have time to take about a 10-minute break before we bring up our panelists and Bo to MC our first panel. So I think we got a mic around here. So just raise your hand if you have any questions I can answer here before we take a break, and then we'll dig into our panelists. See Brett over here.
Hey, Don, I don't know if you touched on it, but I think it would be helpful, maybe you're doing in the future, but just some of the performance of the funds, right? I think the ability to have diversification within housing, right? Investments, whether it be ground-up development or existing multifamily and or lending, and just explaining that for someone who might hear that, I think that would be really helpful.
Yeah, thank you, Brett. So for those of you interested in investing, a lot of you are active, real estate developers, builders, operators. But any of you who invest passively with other investments, we are doing a dinner event tonight. I know we're pretty booked up, and I know a number of you are staying for that, but you can talk to our team out here at the front if you want to join us. And we're going to dig deep into that. But in short, we run 4 investment vehicles, one that invests equity into existing housing communities, one that invests equity into building new housing communities, one that does senior secured first position lending, and one that does mezzanine lending. And all those funds are evergreen, open-ended, private REITs that we manage at DLP and allow us to invest across the spectrum of the products I showed earlier. So what people expect from DLP, which is important for those who are deploying our capital to know, is they expect double-digit returns from us. They expect regular, in most cases, monthly distributions. They expect us to always achieve what we target, and they expect liquidity. As well as great service and reporting and so forth as well. So that's what we deliver to investors and have for a long time, and we're very blessed to have about 2,900 investors. We call them families invested with us today and rapidly growing. We added 428 families last year alone. So we're very blessed. That capital has been very loyal and very sticky, and we build deep relationships with our investors, same as we do with our sponsors, which allows us to be deploying a lot of capital in this market. Because we have really reliable capital in our funds. Thank you, Brett. Anybody else? David.
What is your geographical diversity and your spreads of your activity between coastal or primary, secondary, tertiary markets?
Yeah, so I'll kind of repeat that a bit. So his question was about where we are geographically and different levels of market, size market. So geographically, we directly develop and build in really 8 states. So really the Southeast, Texas, and Pennsylvania. We own today, I think, in 16 or 17 states that we own operating communities in. And then we can lend in about 44 states. I think we've lent in about 36, 37. I think we actively have loans in the low 20s. So we're like a lot of groups, very focused on the Sun Belt, even more focused on the Southeast plus Texas. But we look to build deep relationship with groups that know a market really well, or markets really well, and expand into those markets, assuming they hit the elements that we're looking for and ability to provide attainable workforce housing. In terms of different size markets, we're not in. We'll lend and happy to, but we really don't do a lot in Miami, directly in Atlanta, directly in Charlotte. We'd love to. We just haven't been able to make the kind of yields work. We tend to be in the secondary markets. A lot of the up-and-coming markets we always like. We do a lot in Jacksonville. We're located in St. Augustine, right south, Orlando, the Greenvilles, Spartanburgs, Ashevilles, Fort Worth. We haven't been able to get into Dallas, but we love it. But Fort Worth, Houston, some of the markets that we're very active in. Thank you. Anybody else?
How do you keep the AMI at 30% in this rising market?
The question was, how do we keep AMI at 30% in this market? And I'm not going to directly answer your question because that's something we're going to get into with the panel. But the short is, it's hard, right? There's no easy formula. And part of kind of David's last question is, when you're developing or building new housing, unfortunately, you end up having to be very selective in terms of which markets you can do so in. Right? You can really only build new housing in markets that have AMIs of at least $80,000, right? Fortunately, even markets with $80,000, $100,000, $120,000 AMI still struggle with attainable workforce housing. Believe it or not, St. John County, the county I live in, is the fastest growing county in Florida, but it's also the highest average sale price in Florida, the highest rent, the highest income in all of Florida. And so in St. Augustine, where we have an AMI of 110,000, 115,000, to find a housing bigger than one bedroom, it's almost impossible to find less than $2,500 a month, right? So in a market like St. Augustine, 1,800, 1,700, 1,900 is attainable. In another market, that might not be, right? So unfortunately, a lot of the smaller markets and lower income markets are hard. So I mentioned how we love Spartanburg as an example, but a lot of the Carolinas, it's very, very hard. Outside of Raleigh, outside of Charlotte, outside of Asheville, outside of Wilmington, it's very hard. The incomes aren't there to support where you need to be. Rents are just too low. Brand new rents on a 2-3 bedroom in a lot of those markets are $13, $14 a month. You just can't afford to build it. And then it's being very, very efficient and buying land at a great price, being very efficient in what you're building, generally building slightly smaller units. You have to be, to build as close to $200,000 a door when building new housing as possible is the short story, and that's not an easy thing to do. But we'll dig more into that with the panel for sure. Yeah. Yeah, it's a great question. This question was, do we focus on the military? We're certainly in some markets. We love, like many do, markets that have a military base as a great source of employment. But our focus is a little, in that we're really focused on families. Is different, and we're not against it from lending. If you've got a great strategy for senior housing, you've got a great strategy for military housing, et cetera. There's need in every different however you want to call it, class of renters, but we really focus on is family. So example, the product we've spent a lot of time developing over the past couple years and are now going into construction on is a I'll call it townhome product for simple terms, but it's a first floor master, a 2-car garage, a fenced yard with amenities, and our focus there in their 4 bedrooms. 2.5 bathrooms, right? We're focusing on families. We want families there. We want people with kids and dogs and so forth, and that's who we're focused on. That the goal of having 8-10-year occupancies wouldn't make sense with military focus. It's a different need. It's a great need, one very much needed in a lot of markets desperately, but that hasn't been an area of focus for us. But I think it can be a great niche for sure. Yeah, great question, Jonathan. Yeah. So our focus right now, and there'll certainly be other areas we expand into over time. This past year, we've been very focused on, which we certainly can then, but we're planning to get into the RV space for a number of reasons. That's been our newest area of expansion, which we think of as a way to create great, thriving communities. So that's been our newest area of focus in terms of quote-unquote asset class. But there'll be other areas we expand in over time. But right now, it's really, we feel we're in a really unique window right now of the need for what we're doing. Because as many of you know, regional banks, community banks have been who we've relied on to provide the financing to build new communities, right? Really since for as long as any of us can remember, right? And they're pretty much out of the market today. So the gap and the need for housing is so great. Need for financing is so great that we're going to be quite busy on that, and then figuring out how, as we scale rapidly in terms of size and dollars, and number of units, and number of residents, how we make sure we're building real thriving communities, how we're really making a difference here. But that's where really our head down over the next couple of years is focused on, is scaling the platforms we already have and figuring out how to do a better job of enrichment, which is the goal of this mastermind here. But there'll be other elements we continue to expand into, but that's really where our focus is over the next few years. So there's a lot of work to do there. Thank you. Anybody else? All right, we'll take one more, and then we'll take a 10-minute break and have our panelists come join us. Michael?
Hi, you may have talked about this earlier. Do you provide debt, equity, combination of both? How do you characterize the capital?
Yes. So we run different funds that do all the above. So the main way this year we'll deploy $1.5 billion as a lender, but in a lot of cases we'll what a lot of people would think about in this market as debt and equity just as a lender, i.e. if you were going to go build a ground-up community today, whether that's build for rent or multifamily or even an RV campground, you're going to probably only get 50, 55% leverage, maybe 60, maybe 65 from a bank today. So everybody in the market now needs to go to pref equity to then bring the next chunk of capital. Well, we're providing 80, 85% loan to cost as a senior lender, which really, I don't know anybody else doing that really today. So we're able to provide a lot bigger piece of the capital, but debt's always going to be the biggest piece of the capital stack, so that's where we're most active. But then we do mezzanine debt, we do pref equity, we do joint venture, pragmatic with sponsors. We build deep relationships with them, so we have capital kind of in each seat in the capital stack.